Assalamualaikum everyone. Today our group members will present the current issues about the bright growth of Islamic finance in South and Southeast Asia. In this video's content, we would like to explain more further in introduction. Second, strategies to attract millennials by improving the Islamic finance technology. Third, the factors that influence Malaysian people in choosing Islamic banking. Fourth, the challenges in development of Islamic banking. And last, we will summarize discussion in the conclusion part.
So, before we are started, I would like to summarize this article in order to give a clear information regarding this topic. Why South and Southeast Asia being a bright growth spot in Islamic banking?
As we all know, the growth prospect of Islamic banking will remain strong in South and Southern Asia over the long term, such as in Indonesia, Malaysia, Bangladesh, and also Pakistan.
According to International Labour Organization, the prime age population are growing so fast in Muslim-majority countries in South and Southern Asia. We can point out the estimated growth rate for those who age 25 to 54 are growing fast in this region from 2019 until 2025. If you can see, Pakistan and Malaysia taking the lead among the Muslims majority market. Despite of being most popular and majority Muslim on that country, the expected of demand must be driven by the young and growing generation as well as the effort from government into develop this sector too. With the majority of Muslim in this country, the cultural affinity towards halal products and services will engage the demand for Islamic financial services. And according to the news, Malaysia will stand out as being the prime candidates to come out with the region's first digital only Islamic bank. The government plans to give out to 5 digital banking licenses. Thus, Islamic financing will expected to continue expand faster than conventional lending.
So, how to attract more millennials to Islamic bank? First and foremost, Islamic banking need to understand their target market, which is the young generation or also known as millennials. According to Cambridge Dictionary, millennials are those people that grown up along with the development of technology and the usage of internet. In fact, millennials are considered as the most tech-savvy population. Therefore, Islamic banking should focus on their improvement in financial technology or fintech that will attract more millennials. Here are the strategies to improve Islamic fintech. Firstly, improve Islamic fintech with robust security. As we know, security is the main concern of millennials as the main user of Islamic fintech. This is because both financial institutions and customers who engage with fintech will always be the main target for cyber criminals. The most common cyber criminals are the breach of data, include personal and corporate data, as well as fraud and scam. So, to improve Islamic fintech security, Islamic financial institutions should implement precise authentication technologies such as one-time password system, mandatory password change, and adaptive authentication. Some of Islamic financial institutions might have developed this security system, but this security system should be improved as technology is evolved from time to time. Secondly, develop specific regulation for Islamic fintech. This is because Muslim millennials also concerned with the issue of non-Sharia compliant event in Islamic fintech activities. The research from Raza and others reveal that in Malaysia there is no specific law to guide the adherence of Sharia principle in Islamic fintech. Therefore, BNN and Sharia Advisory Council should cooperate to issue specific law and regulation for Islamic fintech, as it will help Islamic financial institutions to gain the trust and confidence of customers, especially millennials, to be involved with Islamic fintech.
Let's move on to the factor influencing Malaysians in choosing Islamic banking. Malaysia today has one of the world's most sophisticated banking environments with a well-developed financial market. By that, Islamic banking has witnessed a remarkable growth in the past decade. There are some factors that are influencing potential customers in Malaysia with growing population and whose official religion is Islam. The first factor is religious factor. The improvement in the awareness of the Islamic banking and finance among young generations and elderly has made religious as the factor for them to patronize Islamic banks. Malaysians are now set as Sharia compliance as the most important criterion to cater needs and to perform banking transactions. They realize that most of the banks in Malaysia practice interest-based banking, and interest is clearly prohibited in Islam. Hence, they have chosen Islamic banks for riba-free contracts. This can be supported by research study, Malaysian Consumers' Preferences for Islamic Banking Attributes, written by Abdel Ghani Echabi and Oladokun Nafiu Olaniyi. The results of the research stated that some Malaysians would have chosen another bank that is much stronger and more available in Malaysia, but because of the Islamic factor, they have chosen Islamic bank. Thus, it is proven that religious as one of the factors in choosing Islamic banking. The second factor is lower monthly payments. The cost or price of financing rate is also one of the crucial factors influencing Islamic banking adoption. For instance, in Islamic home financing, where house buyers will compare and analyze the rate provided by Islamic banks with other banks including conventional banks in order to decide which bank could provide the lowest financing rate. In Islamic home financing, there is no elements of interest and only emphasize on flat rate or profit rate. Profit is charged based on outstanding principals only with no compounding elements, so the total profit payable for the financing will be much lower as compared to conventional loans. This can be proven by research study, Factors Influencing the Adoption of Islamic Home Financing in Malaysia, written by Nur Fadli Basir, Zarina Zakaria, Haslinda Abu Hassan and Ervina Alfan. It stated that in Malaysia, that cost or benefit is also a factor in choosing Islamic banking.
Demand and acceptance for Islamic banking products continue to be on the rise in Malaysia, and other Islamic finance markets have given their systemic importance and mainstream relevance. In an effort to expand Islamic finance, there are also some challenges that are always faced by Islamic banking. The first challenge is the public awareness of Islamic financial industry is quite low. According to an article that we choose, Tempuli say that Malaysia is the region's Islamic financial leader that already fairly developed. Malaysia is a major center for Islamic finance in the domestic sector. Suku, for example, mark up more than 60% of its market. Malaysia has seen Islamic financial innovation and has well-developed frameworks, rule and other aspects. However, the penetration rate in Malaysia is relatively low, which 40%. This is because of the lack of public awareness of Islamic banking in Malaysia. According to the report from Bank Negara Malaysia, about 60% of Malaysia's small and medium business are unaware of the availability of Islamic finance option in year 2019. The awareness gap still remains even in developed markets, though confident in the Sharia compliance of the financial products. Based on an article from the Focus Malaysia website, Indonesia boasts the world's largest Muslim population, but the Sharia financial literacy rate was only 8.9%. In Pakistan and Bangladesh, confidence and demand for Islamic banking products are strong in rising Islamic finance market rate to their systemic importance compared to the lower in developed Islamic finance market like Malaysia and the GCC. The average population in Malaysia been choosing conversation bank over Islamic bank is because they think that Islamic banking have the hidden charge over customer. This implies the reason from Islamic finance to grow slowly than expected. For example, article from Institute of Islamic Banking and Insurance have said that Islamic financial system simply describing interest-free does not provide a good and correct picture of system as a whole, and this tends to create confusions.
In a nutshell, Islamic banking has positively growing, especially in a Muslim country, as an article said, which is Malaysia, Pakistan and Indonesia. Malaysia's Islamic financing has growth despite the pandemic of COVID-19. As many of the companies has facing the challenges during the pandemic, but Malaysia's Islamic banks geared up against the COVID-19. The Islamic banking in Malaysia managed their financing growth of 8.1% in 2019, and Islamic financing driven financing to 7% wider compared by 2% of conventional bank. Article by Fitch Ratings mentioned that the share of Islamic financing in the banking system reached 37% by the end of 2020 compared to 35% end of 2019. with all the factors that have been stated might have a big impact on growth of Islamic financing. Pakistan having a good growing with 30% in Islamic banking asset during 2020 fiscal year, and the asset industry increased to 4,639 billion Pakistani rupees. The most populous nation, which is Indonesia, the Islamic finance industry has grown to 21.58% during the early 2020 to November 2020 to 1,770.32 trillion rupiah, higher than 2019, which is 13.84%. With all the strategies that had been mentioned had given a good impact on growing of Islamic finance. It shows that the Islamic and conventional finance has standing up at the same level. With a good expand on Islamic finance, the challenge are the biggest barrier. It may make the Islamic finance even grower, or it will stop the Islamic finance from growing. Anyhow, Islamic finance have the biggest opportunity and has the expectation to be more growing, not just in Asia but also globally. Thank you.